Hi, good evening, everybody. Once again, thank you for joining us this evening for the 2026 New Launch Roadmap by Mr. Jim Tay. He's one of the youngest project ICs in OrangeTee, and he was 2024 top 40 agents under 40. Not only is he a lead IC for many of our projects, especially in the central area, he's also the Japan Country Business Director for OrangeTee. Okay, and today he'll be sharing on hunting the growth grabs and smart money leading, where is the smart money leading to? Okay, so as we embark on this journey, he'll be sharing on again the 2026 new launch roadmap. Jim, are you there? Give us a second. Hi, Jim.
Yes, I
Yeah,
am.
passing
Thank
the
you,
time now
Elizabeth.
to Jim. Thank you.
Thank you, Elizabeth.
Um,
Hi, everyone. Thank you for joining us this evening. First of all, wish all of you a very happy New Year. Happy 2026. I'm doing this as this is my second run of this sharing. I did it the last time was in December, late December, but I understand many of you were away on holidays. So I received very good feedback, and many of my agent colleagues have asked me to do a repeat session. So here I am today to deliver a repeat session with some additional content from my previous one. So it's good to have all of you back. And thank you for coming, especially to the OrangeTee agents who invited you today as well. Just to have a sense of the crowd I'm speaking to today, can I have some interaction? Let me know if you have heard me speak before. So if you have heard me speak before, please type 1 in the chat. If you have never heard me speak before, please type 2. So I get some sense of the crowd that I am speaking with today. Okay, so 2 is never heard me speak before, 1 is heard me speak before. Okay, Sunny, nice to see you. Stanley, Dexter, Frank. Hi, Priscilla. Hi, Eric. Deborah. Wow, I see that looks like the majority of you here have not heard me speak before. Okay, so thank you for your OrangeTee agent who invited you today. Hi, Jacqueline, Kayla, Shireen. Hello. All right, so for those who've never heard me speak before, please allow me a few minutes to share more about myself. A few slides. So hi everyone, I'm Jim Tay. I started off as a graduate from NUS accounting in the NUS Business School. So I analyze, I dealt a lot with financial statements and companies. So I focus a lot on numbers as well when I advise my clients regarding their property investments. This was my graduation photo more than 10 years ago already in 2014. Yes. Thereafter, in fact, I was actually one of the pioneers in the YouTube property space. These days, we see a lot of property influencers on YouTube, and it's almost a norm for many realtors today to have videos. But in fact, I was one of the earliest who started doing videos back on YouTube from 2019, 2020 days. And this was one of my most well-received videos in 2021, where I constantly, every half a year, I would come up with new launch projects like my anticipation of what's upcoming in the half a year ahead. So I was one of the first movers in this area. And thankfully, right, because of all my study, my deep research into new launches, it has paid off for me. And recently in 2024, I was the top residential project closer in the company. Right. So I managed to do well. I managed to go deep into the subject of new launches, which I'll be sharing with you more today. Furthermore, why do I do this and what do I see differently? For me, after I became a dad in 2022, I cut down a lot on videos. So I'm very thankful for the results that I delivered to my clients in the earlier years, such that I have enough referrals and enough repeat customers that I'm still able to consistently do well in this line, even though the volume of videos that I do has dropped drastically. So for majority of this year, I had my second child. She is now 10 months old. Through this, I also realized that we don't just invest for profits. We do real estate for the ones we love. And very recently, last week, a couple of weeks ago, in fact, I had a client that I met at Clement Canopy doing a normal handover for a tenancy. And the client shared with me that he finds my work very meaningful because I'm helping people with something really tangible, something that's very important to their lives, their house, something very important. And I realized that as a family man myself, and why I'm still so passionate in this business is really about connecting with families and helping them find their home, helping them to build their wealth nest. I was also very blessed to have an opportunity to lead my sister company, OrangeTee International, also related to a related company, OrangeTee, in their quest to expand into the Japan market, because one of our shareholders is Tokyo Livable, one of the largest Japan real estate firms in the nation. So because of this, I in fact bring a different perspective as well, something that's unique to myself, because I don't think many agents have this additional expertise. It's a global perspective, which I can share with you more information on how this helps me in spotting deals in the Singapore market. Later on, I'll share more details. All right, so what will I be covering today? First of all, as shared earlier, I'm very much focused on new launches. So I'll share with you my philosophy on new launches and why I think new launches are good buys, right? I will also be going to the topic of today, the 2026 landscape, the real estate roadmap of the new launches upcoming for this year. I will also be talking about the growth gap and what I mean by the growth gap and how we can identify what's worth investing in 2026. Finally, I'll talk about the strategy and how we can proceed in this first quarter of 2025. We have a lot of data to cover tonight. I may go too fast sometimes, and if I do, please feel free to let me know in the chat. Elizabeth, if you see any comments that I'm going too fast, please let me know and I will slow down. I'm here for you. I'm here to share the data, and I don't want to be too fast, right? But generally, I am quite straight to the point, so do pay attention. A lot of info may be shared by my speech alone. So if you need to take notes, please feel free. All right, so now that we are into 2026, URA has in fact released the results of the whole year 2025 in early January. So I've added this as an additional slides to my previous sharing in December. So we can see at a glance, overall the data, we read the headline, private residential prices in 2025 grew at the slowest pace since 2020. We see very clearly here in 2020 to 2021, there was a spike, a year-on-year spike of 10.6%. I mean, we all understand that during the period of COVID-19, there was plenty of inflation and a lot of goods and services, especially property, has increased by a high amount just over a couple of years, right? Even the following year, 8.6 and then 6.8. But you can see clearly now the market is stabilizing to a normal growth rate, right? Pre-COVID, you see that it was 2.7, 2.2 per annum, and now we're at 3.4% per annum. Still growing, but stable, controlled growth. Let's dive a little bit deeper on the non-landed segments in Singapore. This is for HDB 2024 versus 2025. If you can look clearly at the boxes in the graph, those are the figures in terms of the per square feet and the volume for 2024 on the left and for 2025 on the right. If you look at the numbers in terms of price, it has gone up for the HDB over the last year, but volume has come down. One reason for that is that because in fact, the number of flats that reached MOP in 2005 was about 8,000. What do we look forward to this year in 2026? We see that there will be a new bumper crop of MOP flats in 2026, with nearly 13,500 flats expected to fulfill its 5-year MOP. It's a significant increase compared to 8,000 in 2025. So what this means is that we will continue to see a lot of upgrader demand coming to the market this year. At the same time, when we look at condo, this is the resale market. In 2024 versus 2025, price similarly went up while volume stayed constant, right? Resale market tends to be a bit more stable with volume. You can see clearly supply in the market, it transacts as about slightly more than 10,000 units on average every year. New launches is the more interesting one that really drives the market. And we can see that from 2024 to 2025, there is a clear uptick in price as well as volume. At the same time, we know that from earlier data I shared on the HDB, more upgraders are coming to the market. So for 2026, the prediction is that new home prices are going to hit new highs as supply tightens. At the same time, new upgraders come to the market. Right. This slides is just to give you a overall broad idea on how the market has performed in 2025 and what we will likely expect moving forward in 2026. Now let me move on to talk about my new launch investment philosophy on why I believe that new launches is the way to go for a lot of property investors out there. Right. The 5 pillars of the new launch advantage. The first pillar, when you purchase a new launch, it is under the progressive payment model. You pay incrementally over time for high value asset and your capital works harder. Your CPF is also usable for stamp duties and you don't have to come up with a large amount of cash cash upfront. And your mortgage payments also gradual. You won't be paying the full mortgage payment right upfront. So it's more efficient for your cash flow. Next is that you purchase with zero hassle and little risk. You purchase with a brand new developer warranty when the project TOPs. You don't have you unlike resale, it's where it's caveat emptor, buyer beware. Sometimes when you buy a resale, you're not, even though it may look good on the outside, but when you enter, you realize that there are a lot of things that you need to fix and a lot of things that you may not have known that only appear after you own the unit. Whereas for a new launch, there's the warranty, there's no hidden defects. And if you're renting out the unit, there's no tenant management issues on day one as well. Next is transaction certainty. In the resale market, sometimes you are only dealing with whatever units are on the market. If there are multiple buyers going with a single unit, sometimes you can get into bidding wars. Sometimes you will be concerned about whether the bank is able to match the valuation price of the unit. Whereas when it comes to a project, usually the list price is the price that you get, and most buyers will enter the project at a similar price. Right? It's much more clear and much more transparent in terms of the pricing. This is one that I really like, especially these days, and it's something that I really help my clients because my clients are busy. I think all of us here are busy. So again, thank you for attending my webinar today. We don't really have the time to go view 20 to 30 condos over a weekend and spend 1 year looking for houses. It eats into a lot of precious time that can be used for better things, right? So when I propose new launches to my client, it's really the sniper approach. So how I do it is that we take a broad-based overview on a certain segment, a certain area of the market, depending on my client's needs. We focus on analyzing a few projects because any location has a maximum of maybe 3 to 4 projects at one time. We look at the numbers, we do the comparisons, the market analysis. If it makes sense, we go for it instead of spending months or years viewing resale units that there's so many in the market. A lot of this actually, just to sidetrack a little bit, I learned in Japan as well to share some of the experience because when I look at the Tokyo property market, there's so many listings. If a buyer were to view everything, it will take forever. So really our job and how I help my clients is to help them to shortlist and save time. Next is the privilege of choice. When you purchase a new launch unit, especially if you get a good ballot number, of course, you have what we call the first mover advantage, meaning you are the first to purchase a property before anybody else. That gives you the privilege to choose the golden units, the best facings, the rare units, the high floors before anybody else, and may likely give you a premium, a rarity premium when you sell in future. That's unlike in resale where for good units, very often you enter into a bidding war. Let's explore a couple of points further. First, when I talk about capital efficiency, I want to talk about the hidden cost of resale. So, a very common thing that people will mention when I propose new launches, they will say, "Oh, if I have to sell my house, then I have to rent, right?" And renting is a cost. But what they don't realize sometimes, buyers don't realize sometimes, is that there is a cost of resale property as well. So sometimes, in fact, very often when you purchase resale property, you have to pay renovation costs upfront. And these days, for anybody who has renovated properties recently, you know that renovation costs are not cheap anymore, right? With materials costs being very high and labor costs also very high. So you must be prepared for a 3-bedroom unit. Renovations can easily cost between 150 to 200 grand, especially if you're buying an older resale unit that the renovations has not been done for maybe 10, 15 years. These costs are sunk costs, and the value that you spend on the renovations rarely add one-to-one value to the valuation. In fact, a better alternative that I always tell my clients, and I mean, just to share as well, myself, I'm also renting right now. You rent so that you have flexibility. Renting gives you the opportunity to also try new areas. Sometimes the risk of buying resale is that, and I have seen many clients also, they don't realize the inconveniences and the quirks of certain condominiums until they stay there. One example that I share is that I have a client who went to buy Caspian on their own, right? When they visit, they felt that the MRT noise was okay, it was doable. But only after they purchase, then they realize that, oh, whenever the MRT comes, the house vibrates. The noise is so unbearable, right? So these are certain things that is costly if you were to purchase a $2 million asset, 3-bedroom, for example, close to 2 million. Whereas if you rent, you would be able to figure all these small minor annoyances at a smaller cost, right? Hence, I think renting is a safer strategy and gives you more flexibility. At the same time, you own a modern asset that can command a premium at TOP. If the asset is great, you can stay. If you still realize that it doesn't fit you totally at that point of time, you can still sell it for a profit. That's the advantage of going for new launches. The key takeaway here is not to confuse own stay with a good investment. Sometimes renting for the short term is a smarter bridge to wealth when you can get a better property in 3 to 4 years' time. Next is transaction certainty. Let me go a little bit deeper on this. When we look at the Singapore resale market, it has been up since 2017, close to 10 years now. So it kind of can seem like everything will go up. You buy, especially for those who invested pre-COVID, you buy new launches, you buy resale, every single thing will go up. But I can also share with you, and later on I will have data as well, that things can generally turn quicker for resale in a slow market versus new launches. Because new launches, structurally, there is a safety net. Here's why. Because when you purchase a new launch, when you purchase a resale, I mean, your neighbors has purchased maybe 10 to 15 years ago at a lower price, let's say 1,002 PSF, for example. They can potentially sell at 1,008 PSF and still profit. Whereas today, you may have purchased it at 2,005 per square feet at the highest price in the entire development because the property price of this project has risen so much over the last 10 to 15 years. Whereas for the new launch, if you enter into a new launch and the average price is 2,500 per square feet, no one can afford to sell cheap. And in today's market, with all the restrictions, all the ABSD, your TDSR, your SSD, your buyer stamp duty, purchases are not as easy as they were before. So every purchase is done with proper calculations, proper consultation with their agents, with their bankers before they enter into any purchase. Hence, they will not sell cheap, and everybody wants a profit when they enter at a certain price for the new launches. Furthermore, developer actively increases their price stage by stage, creating paper gains for early buyers. The key takeaway here is that for the resale, 99% of owners bought at a much cheaper price than you. Whereas for new launches, 99% of owners bought at a similar price to you. If you want your price to hold well and even appreciate, you want majority of your peers in the same project to want the same as you. So the critical question, which group has the higher risk of undercutting your exit price in future? Next, when you make the right choice today, you have an easier exit in future. When you purchase something that's a new property, you get modern specs. You get efficient layouts, which are the harmonized GFA. The older layouts, if we have seen properties gone around with our agents, we have planter boxes, we have bay windows, we have huge aircon ledgers, we have no balconies or sometimes irregular shapes or unusable balconies. aging facilities, tired, your gyms are old, pools are basic, small function rooms. Whereas today, condos have become a new standard to really fit the lifestyles of today's owners. Very importantly, GFA are now harmonized, meaning you only pay for usable internal space, as well as lifestyle facilities are also way enhanced. You have your co-working pods, you have concierge services, you have modern gyms, you have Sky Gourmets, infinity pools. This is not just something you think about now, for example, because you have to think about 5 to 10 years later, or even longer if you plan to hold the property for a longer time. In future, the market will be flooded with these new, hyper-efficient, modern, optimized, wellness-focused condos. Whereas now, we are only seeing a few. In fact, I believe not for the launches that has harmonized. I don't think any has completed yet. The first, I believe, was Lentor Mansion, if I don't recall wrongly. It has not completed yet. So we haven't seen any new harmonized condos TOP yet. Sorry, can't see my face. Sorry, quick technical error. Let me just change the. Hold on. Okay, managed to fix it. I changed the camera to my laptop camera. All right, so let me carry on. So as I was saying, right now, we don't see any of the harmonized projects on the resale market yet. But think about the future, 5 to 10 years later, the market will be flooded with increasingly more of such properties, making so that the older units won't just be old, they will be seen as kind of obsolete. So they will face increasingly obsolescence as we have more modern, better layouts properties in future. So purchasing a new property today, you want to be on the correct side of this trend instead of being on the dated layouts with dated facilities. This will give you exit liquidity when your client this will give you exit liquidity when your future buyers are comparing with other projects on the market as well. Okay, so now that I have spoken about the pillars of why you should be investing in new launches, I want to move on next to the upcoming projects that we will see in 2026 and 2027. This at a glance, it's from our company, so you can request from your OrangeTee agent that invited you. This at a glance, all the projects that we'll be launching over this year and early next year. You can see quite a number of projects here, but I want to categorize each of them by investor perspective. Question is, what are you buying a new launch for in 2026? So here are the categories. Category 1 will be for the mass market and the upgraders, where affordability is key to this group of buyers. On the left column, you will see executive condos. Executive condos are the darlings of the market. If you qualify, it's a great buy. It's almost guaranteed free equity, but you have restrictions, your MOP and your income. On the right column, you see your suburban private condos. We have Nara Residences, Pinery, Tengah Garden, Lentor, Upper Thomson, and Chencharu Close. These are the floor prices for 2026 launches and are the most accessible entry points for first-time investors and budget-conscious families. I'm going to pick out a few of them that I think deserves closer attention at this point of time and share with you some of the key highlights. So pay attention to this portion. The first is Nara Residences. Recently, I had the opportunity to attend one of the very early Asian briefings, which was before I came for the before I did the last seminar on December 17, it's really the site plan is great, the facilities are awesome. It's really a nature sanctuary in the west region of Singapore, in close to your Dairy Farm Nature Reserve, your Bukit Timah Nature Reserve, very accessible by BKE and PIE. It's really a home for somebody who wants to feel like a resort hotel kind of feel. And indicative prices are really attractive, with one bedroom going starting from less than $1 million. And your three bedders, entry point for families starting from as low as 1.6x million dollars. Right? It's going to be open for preview in a couple of weeks' time, next weekend on the 16th or 17th of January. The next I want to highlight is your Revel Tampines, which is an EC and Pinery residences. Why is this worth highlighting? Because last year there was a very similar launch called Orel, which is an EC, and Parktown Residences. Those two projects also did very well at that point of time. It's a comparison because for Orel and Parktown, they were located at Tampines North MRT station, which is an upcoming train station on the Cross Island line. Whereas for Revel and Pinery, it's sort of an upgrade because it's located at an existing MRT, your Tampines West MRT station on the downtown line. And it's also close by to Bedok Reservoir. So I believe just like Orel and Parktown did when they launched last year, Revel and Pinery would have very, very strong response as well from the upgraders in the east. Next is Tengah Garden Avenue. This is the first condominium launch in the Tengah HDB New Town, right? So far in Tengah HDB New Town, we have only seen executive condos, your Copen Grand, your Auto Place, just to name a few. But now we have the first condo plot, Tengah Garden Avenue, and it's a mixed development as well. And I believe will be integrated with the Hongkar LRT station, the Jurong Region line, right? This at 821 per square feet per plot ratio, you can see is possibly the lowest entry price condominium launch for the year. So for budget conscious families looking for something with the convenience, something with good convenience and good connectivity, and looking for a home in the West, I think this is something to look out for as well. Next, we have Lentor Gardens. Again, this is in the OCR outside central region of Singapore. It is one of the last few condo plots happening at Lentor, and it's the last plot that's surrounded by the green fingers. If you've ever seen properties in Lentor, Lentor is very interesting because even though there has been so many launches, there's barely any new supply left for buyers in the market. So I have buyers. I've met with people and spoke about Lentor as well. They shared with me, wow, there's so much supply in Lentor. Should I be entering the market? But on the flip side, we see that many properties in Lentor, all the new supply has been taken up. Meaning to say, if you recall, I shared about the structural stability. In Lentor, you have the strongest structural stability in all of Singapore because it is the area that has most new launches and at the shortest period of time. Most people are entering at the same price as you, which is very, very secure and safe for your price. So in fact, it's one of the safest areas, I would say, to purchase in Singapore. Next, we have Chencharu Close. This one is also very interesting because it's a new HDB town in Khatib area that will be coming up, that the government has planned for. This is a mixed development. It's a mix with commercial and integrated with a hawker center and bus interchange. Again, if you want to go for something that is low price, something that is upcoming in a new town, a good comparison for this is, I would say, Woodley Residences at Bidadari, which is also an integrated development, and it also added a lot of vibrancy and did very well for investors as well. So this is Chencharu coming up in the north. All right, so those were the category 1, the more entry-level property launches for 2026. Here is category 2, where we talk about the established living collection, places that are in mature, developed estates. We have Chuan Grove, right? We already have a few launches. We already have Trump Park, and there are a couple of more plots over there that will be launched in 2026. Thompson View. Thompson View is one that I want to spotlight on because the last time there was a condominium that was 1 kilometer to Aitong Primary, that was AMO residence, AMO residence. The first condo, in fact, to cross 2000 PSF for OCR region condos. The take-up rate is very, very good, and I believe Thompson View would do the same. Personally, we have a contact that used to be an owner of Thompson View, so he already managed to see the site plan, and it looks awesome. It is very expensive. There's a very large pools, resort living, and then you get nice views of the reservoir as well, unblocked views. So I think this is something that is very suited for families looking for something in the RCR zone, not too far away, and for Aitong Primary School, of course. Next will be Lakeside Drive. Coincidentally, I spoke about Caspian earlier. I also have a relative who purchased in Caspian, but pool-facing unit, thankfully. Um, there's always been an inconvenience about staying in Lakeside because there's not really any amenities nearby. But this will be a game changer for the location, being located very, very close to the train station, the closest to the train station itself, in fact. And it will be a mixed development with commercial shops as well. Developer will be CDL. And being the first harmonized plot in that area also, it's sure to draw a lot of attention for buyers looking for property in the West. Dorset Road and Media Circle, those are more straightforward. Those are in already established hubs in the city fringe. These projects have low execution risks because whatever amenities, they already exist today. Next is the category 3, which are the future frontier place where you are really an investor, a buyer looking at the longer term, because these properties will very likely be launching at a premium. The first is the Bayshore Road, where we talk about the Long Island Master Plan, right? The government has spoke about since the previous election. Land cost is 1388 per square foot per plot ratio, which is record OCR prices and close to your CCR land prices already. Next is your Greater Southern Waterfront, something that was announced by our PM Lee, I think already close to a decade back right now, but with plans for Greater Southern Waterfront coming soon as we enter into 2030s. This is again another long-term plan where you enter into a property at Telok Blangah Road with the land cost already 1326 per square foot per plot ratio. These are high conviction plays. You must like the location. You may potentially want to stay there or invest and rent it out, but you are definitely paying a premium to be the first mover in Singapore's next major chapters. For the fourth category, it's the Core Central Collection of Singapore, the CCR as we usually call it. First, many of these properties here will be setting new benchmarks for 2026. We start with Newport Residences, which is a rare CBD freehold. In fact, it's going to be launched, open for preview soon from next weekend as well. Expected price is 3,500 PSF, but I'll share with you some information that was just released by the developer earlier today later on. Next, we have River Morden, again something that's going to open for preview in February 2026. It's very interesting and people are anticipating it as well because there's been so many River Valley launches that has been doing well recently. River Morden, however, is the last Singapore river plot and is directly integrated with Exit 1 of Great World MRT Station. We have Dunyan Road. This is the popular school zone along Dunyan Road. Land price 1410 per square feet per plot ratio, probably launching near to the middle to second half of this year. We have Holland Link, which is by Sim Yen. It will be the first mover in a new area that has mostly been cluster housing or landed housing. This one is quite interesting to look out for as well. It might be similar to what the government is trying to do with Lentor. Next is Bukit Timah Road, and this one is really quite a game changer because you can see the land price there is $1,820 per square feet per plot ratio. And this definitely signifies the new market ceiling for projects in 2026. Great. So the question here now is, with so many projects coming on the market, how do we choose? How do we identify value in the market hitting new highs, right? Do we just look for the cheapest PSF? Probably not, because price is what you pay, but value is what you get. So the cheapest PSF may not be the best value. So what we look for is look for growth gaps, which is the title of my webinar today. And what are growth gaps? I define it as moments where the market hierarchy is temporarily broken. So what I want to look out for, which I'll be sharing with you shortly, is that we're looking for specific moments in time where there are illogical differences in the market, where what we think is usual in the market hierarchy is broken. So one leading indicator we look at are land prices, because these are bids that developer put into the land in a transparent manner. URA publishes them very openly. We can see how many people bid, what are the prices that they bid for, and typically they give good estimates on their launch prices based on the land bids. So in recent times, have there been situations where land bids have become illogical? And when it happens, is it a threat or is it an opportunity? All right, anybody wants to know more about this? I hope I've given value to you so far by sharing the 2026 roadmap. Please, for some, and just want to know that you have gained value, please type 1, and you want to learn more for me to proceed. Great, just want to have an idea. You're still with me, you're gaining value from this, then I can see and I will proceed further. Thank you, Fanny. Thank you, Fern, Kayla, Janet. Great. Great to see that you're all still with me. Some of you, if you're having your dinner, yes. Great. Ivan, hello, Ken, yes. Okay, so let me share about the breaks in the market hierarchy recently, right? Look back at the history books. First, one of the key events that we saw was in November 2023. We see the prices there for the site known as ELTA today. It's the OCR site outside Central Region, and the highest bid for the land there was $1,250 per square feet per plot ratio. The two projects on the right, Zion Road and Holland Drive. Just look at the dates that are underlying them. It's just within like 1 month apart. 1 month apart for Holland Drive and Zion, right? Compared to November 2023, just 4 to 5 months later, we see that in RCR, the land bid was 1202 PSF PPR at Zion. And at Holland Drive, the land bid was 1285 PSF PPR for CCR zone. So what have we seen there? We have seen that in that period, 2023 to 2024, there is a clear change where your OCR plot is suddenly more expensive than RCR. When I first saw this, I literally scratched my head. I still remember I did a quick TikTok video that I shared online on this topic. This is what I call a break in the market hierarchy. The question that you should ask yourself today as a buyer is that, will you pay more for OCR location than an RCR location? Which is what we clearly see from what happened at the time. Will you pay more even for OCR compared to a CCR location? Something isn't right. So this is what I call a break in the market hierarchy. Then it happened again for the second time. And this time the dates are even closer. If we look at River Valley Green Parcel B, which is in fact the River Modern site that I shared about earlier. It's a core central region site right next to Great Wall MRT Station. And the land bid price is 1,420 per square feet per plot ratio. Just slightly over a month later, we have the OCR site, Bayshore. Yes, the Long Island plan. Yes, it's right near to the MRT station as well, but still it's an OCR site. And the land price is 1,388 per square feet per plot ratio. What's the gap this time? It's a 2.3% gap, even closer than the gap previously from ELTA and Zion. Then the third time, it happened again, right? In Dunyan Road, the Dungeon Road site, again, that I shared with you earlier, a CCR site sold for 1410 per square feet per plot ratio in 3rd of July 2025. This time, in the same month, there was the site at Chuan Grove that sold for 1376 per square foot per plot ratio. 2.5% gap between CCR and OCR. We clearly see that something has shifted in the market from 2023 to 2025. More recently, this was something that also caught people by surprise. In Tanah Merah, right beside the MRT station as well, your OCR site sold for 1330 per square feet per plot ratio. So what does this show? This is the 4th time it has happened. The first time something happens is a dot. The second time something happens, it's a line. The third time something happens, a pattern starts to form. But the 4th time is a trend. What does this mean? It shows that land in the OCR regions can consistently cross more than $1,300, I would say, per square foot per plot ratio. This is a very, very significant shift, and I think it goes back to our government also doing pretty well when they try to push for decentralization, where we have your key nodes like your Paya Lebar, your Woodlands, your Jurong East. It has also reflected in the land prices in these areas catching up to core central regions today. But importantly, what I want to share is that has land prices shown a similar trend before? And what was the impact? Because it's one thing to know what's happening in the market now, but more importantly, we want to know what's the impact so that as an investor, you can act in the correct way. And to know what's the impact, I look back at history to see whether similar trends has happened to predict what might happen in the future as well right now. So let's go back to more than a decade. I have this chart here from Q1 of 2010 to end of 2025. We look at the different trend lines here. They refer to the new launch prices, leasehold new launch condo prices by region. In orange is your core central region. In your dark blue is your rest of central region, your RCR. And in your light blue, the diamonds, is your outside central region. We look carefully at this time in 2013, right? The blue line, which is your RCR, the condo prices, in fact, exceeded your CCR Dhoby Ghaut prices. Anyone who's in the market, looking at the market at that time, you can feel free to drop a guess on what was the project that broke this land bid in 2013 April. If anyone knows, just a few seconds, you can make a guess in the webinar chat. What was this project in 2013? Yes, Anthony. Yes, Robin. Very good. Correct. So in April 2013, this land bid, yes, highlight. Wow, everybody is very good today. They all hear from my last seminar the last time. Correct. So in April 2013, Highline Residences 1163 PSF per plot ratio. What happened at that time? Why do I call it a trap? Because in June 2013, that year, also came TDSR, your total debt servicing ratio. Some people call it the total destruction to Singapore real estate. Because right after this measure came in, between 2013 to 2017, prices fell by 12% over 15 quarters. Right? That shows that when prices when a gap forms in the market, a growth gap forms because the RCR is growing too fast, it exceeds your CCR land prices, boom, something happens, it's a trap. But very interestingly, and it also goes back to showing you why new homes are more resilient, because despite the resale market entering into multiple years of declining prices, new home prices in fact increased during the same period, with the new launch CCR condos increasing by 20%, reverting back to the original gap that they had before 2013. RCR condos, you look, only increased by 11%. So this history shows you that there is risk of resale properties in the market during market downturns. Next, the second time this happened was in fact in River Valley. In June 2016, there was a land plot in CCR. Today, it was sold for 1239 per square foot per plot ratio. And that property there, we don't have to guess, it's written there. Martin Morden, right? The land price 1239 per square feet per plot ratio. And then in about 18 months later, about 300 to 400 meters away in another district, District 3, there was a property at Jakim, RCR. That one I don't have the name. Anyone, I think most of us here would know. The former Zouk, especially if we go parties. That area, the land plot was sold for 1733. Yes, Riviere. Correct. Thank you, Robin. 1733 per square feet per plot ratio. That was a jump of 40%. 40% in 18 months. So what was the impact of that, right? When we see a huge land price jump during that period of time. Prices you see in CCR instantly shot up because even though even though in terms of actual proximity, it's quite nearby, 300 to 400 meters, they are both close to the Singapore River, but the branding of a District 9, a branding of a CCR is still different from your District 3, which is seen as slightly more mass market, right? So the market immediately re-rated, and we can see that there was a jump in the prices for the core central region. Not just that, for early investors into Martin Morden, we see that the developer also increased their selling price, leading to, in fact, many early investors who took action in Martin Morden, making very, very good profits. And Martin Morden was one of the most profitable condos for the CCR region over the last 10 years. So what do we see now? In recent years, we see that, like I shared earlier, due to the decentralization by our Singapore government, OCR has been leading the way. First time we saw the spike up in 2000 PSF around late 2022. The properties that I shared earlier, Amo, Lentor Modern, Sky Eden at Bedok, they were the first properties where we see in OCR region, the average prices cross 2,000 per square feet. Look closely at the RCR blue line. You can see that prior to 2022, the average price was 2,000. But the moment OCR hits 2,000, RCR, the dark blue line, also rise up. Because same thing, buyers and developers also realize, will you pay more for RCR location versus a OCR location? Generally, sorry, I think I confused myself. Will you pay more for an OCR location versus an RCR location? Generally, the answer is no, right? Hence we see the dark blue line, the RCR location, price up. Next jump we see here is that we see OCR average almost $2,500 per square feet. That was the integrated project in the West, Jayden, right? The redevelopment of J Cube. You can see the numbers there. At that point of time, people thought that, oh, it's a one-off. We won't see that consistently happening. But what happened next is that Kingsford, just recently, sometime last year, 2024, Chuan Park sold at an average of 2,579 per square feet. And we also had Alta, at the land bid price of 1,250 per square feet. They sold at an average price of 2,537 per square feet per plot ratio. So we are starting to see that the average prices of OCR launches, in my prediction, would trend, the light blue line would trend towards the $2,500 per square feet line. And this is my prediction for 2026 to 2027, where with the land bid prices of more than 1,003 per square feet at Bayshore, Chuan Grove, and Tanah Merah, and even the recent Hougang, the huge redevelopment of the integrated mixed development is going to exceed $2,500 per square feet as well. The average line price of the OCR would trend towards 2,500 PSF. At the same time, for CCR, your orange line would trend towards 3,005 because we will see launches such as the Newton GLS, and we also have the final River Valley plot, River Valley Parcel C coming up as well. RCR, many of the prime launches like along your River Valley, like your Promenade Peak, your Zion Grand has already launched. So prices would more or less increase slightly, right? Whereas we will see more significant changes in the CCR and OCR. And with time, I expect the gap to re-rate to between 3 to 500 PSF depending on region. So now that we have seen the three cycles, right? Let's compare them and sum it up so we can be clear here. In 2013, there was a trap because if you recall, back then, if we look at the Singapore Property Price Index, post the global financial crisis, the property prices spike up, and that was when our government realized they had to intervene in the market, and that started the many rounds of cooling measures. Market was overheated. No matter what measure they came up, the prices still continued to rise until the tipping point happened, which was when high-line residences land price exceeded your Dhoby Ghaut land price. When that happened, the TDSR came in. It was a trap. Then in 2017, after multiple years, 4 years in fact, of decline in our property price index, the market was stable. Singapore market was stable, and we saw what happened was the arbitrage. Your RCR land cost more than your CCR land, and early investors who bought into the CCR property, which is Martin Modern at the time, they saw plenty of gains, more than 40% gains refers to the land price, but they were one of the most profitable condos in District 9. Today, what we see again is something similar, but even more drastic, if that's the right word I use to describe, because in 2013 and 2017, what we saw was RCR land prices exceeding CCR. You may say that RCR is still just on the fringe, still within the central region, because RCR is rest of central region, correct? But OCR, we are talking about really the further outskirts area in Singapore, and that is a more extreme divergence, a more illogical divergence to see that OCR land prices crossing $1,300 per square feet per plot ratio and being within 2 to 3% of CCR land prices. These launches in future will definitely exceed $2,500 per square feet in OCR, as it has clearly been shown to be accepted by today's market. And the gap between OCR and CCR has never been this close before. So buyers today, if you are considering what areas to buy, what properties to buy, I think we zoom out, look at the trends, and look at where provides the better value. Do you prefer option A, where you're buying the mass market very much at all-time highs, where your OCR land is trending slowly towards $1,400 per square feet per plot ratio? Your prices in OCR are going to average more than 2006 PSF? Or is it a better value to use this opportunity to buy something at the prime core central regions of Singapore at a structural floor where history has shown that the prices in the central area tend to bounce up when the fringe region catch up? And should we follow the smart money, right? Because generally when we talk about smart money, I'm referring to buyers with deep pockets. They're purchasing 5 million, 10 million properties, right? These buyers usually have many people advising them. They can be corporates as well, buying commercial properties, buying GCBs. So this is an indicator as well to see where the interests of buyers are moving. So let me share with you now what are some of the smart money movements that we see in the market. First is that there's a property called the Sky Waters. It's the former AXA Tower. They sold for a record $6,500, 6,501 to be exact, per square feet for a 99-year leasehold property in Singapore, right? This is the record price PSF for a 99-year in Singapore. And there was also an article that shows that demand for Singapore luxury homes has surged, right? In the next slide, I'll show you clear charts and data to show that the market, the smart money, has come back to the central region of Singapore. Was the Skywaters only one buyer? No, right? If we look at the actual volume of buyers on the chart on the left is the number of transactions above 10 million. The last three bars on the right, you can clearly see that there is a clear uptick versus 2024, right? Consistently, there's close to 15 units on average of buyers who are entering into the prime market at property prices more than $10 million. In terms of per square feet as well, you can see on the right, the last three quarters that I've circled. Circle the bars in red are your per square feet, more than 3,000 to 4,000 PSF, whereas in blue, you will see prices that have exceeded 4,000 PSF. So clearly, we can see from this data as well that high PSF prices are not a one-off, and more buyers are increasingly being able to accept such prices in Singapore. To you today, to the average buyers, these numbers may look scary. You might be thinking to yourself, wow, 3,000 over PSF, 4,000 over PSF, $6,500 per square feet. Is the market overheating? But you have to ask yourself, why is the smart money, the big purchasers, the big boys, why are they so confident, right? And they are confident, and it's something that I'm able to share also because as the country business director of Japan, I see properties not as a vacuum. I don't see Singapore on its own. I see Singapore from a global lens. And like I shared, a lot of these big investors, they probably have businesses. They deal with multinationals. They deal with multiple countries. They also see Singapore not as itself, but as a part of a bigger world, a bigger globe, right? So for my next slides, I really want to share with you that even at these record prices, Singapore is actually still very undervalued and still very attractive to investors. Hence, many buyers are really still taking action, and our property market is still very, very strong, right? So I'll share with you in the next slides. If you want, if I'm very excited to go on. Do you like me to share? Please again type 1 in the chat so I know that you are still paying attention here. Great. Thank you, Kayla, Pushpa. Thank you, Janet, Fern, Alex, Luis. Okay, good to see everybody still engaging with me. Great. Jacqueline, many ones. Hello. Okay, so let me share with you the perspective that I'm privileged because it's also, if I didn't get exposure to Japan, I wouldn't be able to know this. But I think it's very important for yourself as well as buyers in the market to know how Singapore stands globally. All right. So this is a survey that was done in earlier part of 2025, which ranked the Asia Pacific best cities based on livability, and prosperity. You'll see that Singapore, my home country, is number one. And who do we see at number two? Tokyo, right? So again, I'm very privileged to be to be representing two of the top tier cities in Asia Pacific, right? Um, this shows that this is why am I showing you this? Because I want to contrast the prices in Japan to what we see in Singapore to give you a better idea as investors. First, for those not familiar with Japan, right? We are probably familiar as tourists because I think Japan is like the number one country that Singapore loves to go. I have broken Japan down into regions, just like how we understand in Singapore. So in Tokyo, and just like anywhere in the world, Japan is a much bigger country than Singapore. But just for some context, right? Japan in Tokyo, there are 23 wards, right? Uh, the entire Tokyo is the entire yellow region, which is the greater Tokyo area, which consists of Tokyo itself, Saitama, Kanagawa, and Shiba. All right, but for Tokyo itself, we are looking at 23 watts, which is the orange zone, right? That is around the size of Singapore. Just to give you a little bit of context, right? And the wealth is concentrated in the central 5 wards, areas known as your Chuo ward, your Minato ward, your Chiyoda ward. Although Singaporeans probably we know Shibuya, Shinjuku Yeah, these make up the five wards, the prime central wards in Singapore. Sorry, in Tokyo, I mean. If we contrast it to the Singapore, I have also color coded it, right, per URA. In the red area, these are known as the central area of Singapore, where you have your CBD area, you have your Clarke Quay, your Robertson Quay, your Orchard, your River Valley. These are known as the central area of Singapore. And in orange, again, if you contrast, in Tokyo is your 23 watts outside the central watts. And for Singapore, it's your remaining central of region, right? However, I want to really focus on the red zone in Singapore because geographically and economically, these two zones, they play the exact same role. They are the engine rooms of the two most powerful economies in Asia. All the big companies, they're all in the same red zones in these two cities. So the question is that if these two city countries, so to speak, are ranked so highly in terms of the best cities in Asia, do they carry the same price? I think this gives a very good perspective to investors. So here's what I want to share. In Singapore, we know we may have heard of the mark on Patterson Hill. It is Singapore's per square feet record holder. It was SGD $6,650 per square feet per plot ratio. Very coincidentally, right, in Tokyo, there is a property also called the Mark Omotesando 1, right? This is a transaction that happened earlier last year, 2025, around the middle of this year. It is Tokyo's per square foot per plot ratio, right? Anyone want to make a guess what was the PSF SGD equivalent for Tokyo's record holder? Come, make a guess. What was the PSF at the Mark Omotesando 1? Can type in the chat. Just type any number. What do you think if Singapore was 6,650 PSF for PSF? I see Roy, 10,000. Louis, 10,000. Any more guesses? Yeah, since undervalued. Moon, 8,000. 13,000. Okay, 5,000. Okay. Toto, did you attend my last one? Very close. The record was $13,500 per square foot. Okay, so this is astounding because in one of the top cities, right? Okay, but to give a bit more context, Tokyo's real estate market is unregulated, right? Foreigners can purchase at the same rules, same restrictions as local Singaporeans, right? But this gives you clear idea. If Singapore did not have all these regulations, all this government intervention, if left to the free market, our PSF prices can be even double, right? To $13,500 per square feet as we see in Tokyo. Furthermore, to share with you, right, this isn't a small property that has very high PSF, right? The quantum price of this property, the Mark Omotesando one, is almost equivalent to 80 million Singapore dollars, okay? So it's not like a shoebox unit with high PSF. It's a large unit with high PSF, okay? 80 million SGD. Whereas for the Mark, that was about 20 million Sing dollars, okay? Because Tokyo is very dense, and you see the Mark Omotesando one, it's not even a high-rise building as well, but yet it's commanding such a high PSF. So what does this tell you, right? In globally, right, tenure does not cap value, but location does. If you look at the Tokyo benchmark, people are willing to pay for freehold, ultra luxury, uncapped, without regulations, $3,500 per square feet. Freehold, the Mark on Patterson Hill in Singapore, 6,650, almost about 50% lower than Tokyo's benchmark. You also have Singapore leasehold, Skywater Residences, 99-year leasehold, $6,500, virtually identical to Singapore freehold. The first fact that we observe is that Singapore's prime market trades at 50% to Tokyo's top tier, right? We are so undervalued that so many cooling measures, it just slow down our price growth to make it more stable, right? And it's what the government wants as well, stable growth. Given our undervalue, given us being undervalued, this is what is good for all of us as homeowners in Singapore. Stable long-term growth. Fact number 2 is that in Singapore, the 99-year record and freehold record are nearly identical. So for ultra prime real estate, tenure is not the limit. Product quality and irreplaceable location are. All right, I hope that gave you good context and broaden your perspective, especially if we are so used to looking at Singapore, just Singapore on its own. So with that, I want to really move down and talk about what we should really shortlist for 2026, right? Because we have seen the flow of the smart money. We have seen that the core central region is quite quite undervalued, right? Especially when you compare to the fast rising prices in the outside central region. I want to filter it down from all the projects to see what exactly should we be focusing on. So if we look at all projects, then I realized that I want to look at core central because it's fundamentally undervalued and it's a structural shift going on right now. At the same time, we have many properties in the CCR. Like I shared, we have Danyan and Holland Link. But if we look at the map of Tokyo and Singapore side by side, I really want to focus on the central area because that's really where the major activities and the major hubs are in Singapore. We want to find the assets that are truly in prime locations that are irreplaceable. So when we apply that filter, we realize that there are only 2 major launches in the central area coming up in 2026. So here is your window of opportunity as a buyer in the new launch market today. I'm sure if you are here, you're interested in new launches and you want to see what is worth paying for. On the right, you can see very clearly we have the 2026 outlook on all the land prices that has already been achieved in the market, and all these projects will be upcoming over this year, right? We see that the new benchmark has been set by your Bukit Timah land bid, which means the implication of their break-even price is about $3,000 per square feet, and your future launch price at Bukit Timah will be $3,500 per square feet, right? Don't just take it from me, take it from HPROP, right? Where they were the ones who gave the figure of 3113, which means their expected launch price with a 10% profit margin will be about $3,500 per square feet. Earlier on, I spoke to some colleagues. They told me that the developer bought the land price cheap doesn't mean they will sell cheap. That's true. We have seen that happen so many times for so many land plots. However, it's not that the developer bought cheap, then they will sell cheap. The fact is that when they bought cheap, it's a great timing that the developer bought and they sell you at the market price. But that market price, it has already been proven that in future, there will also be products that are selling at that similar market price, right? So if you don't buy a unit today, for example, at the prime core where we are seeing prices that have hit $3,000 per square feet beyond on average, in future, you will be paying close to $3,000 for poorer locations objectively, like for your OCR or for your Bukit Timah plots. Whereas for today, there are 2 properties that are still within the old land bid prices. And what are they? First, on the left is Newport Residences, right? In the central area, it's a legacy asset, something that you have no qualms holding for the long term because it's a rare freehold tenure and CBD that's mostly 99-year leasehold. It's an unbeatable address for wealth preservation. On the other hand, you have something that is more lifestyle, more family-oriented. It's the final residential plot along the Singapore River, right at the head of Singapore River. You can see it's directly integrated with the Great Wall City MRT Exit 1. So seamless connectivity. Here you have a rare riverfront location, high family appeal, and high resale liquidity. These 2 projects. Remember earlier on, I shared something about Newport Residences. We have new info that the developer has just released today. Ta-da! Very exciting. I mean, when we receive this starting from price guide, you have starting prices PSF and Newport Residences going from as low as 29XX PSF. That's literally going to be the average prices of some OCR new launches that are 99 years that are coming up later this year. So this is something very, very attractive, right? And it's something that all buyers here today should probably consider as part of your portfolio in the central area. So thank you for attending today, but the journey to invest in property does not stop with today, right? I want to make this very easy for you. So here is the schedule for the next 30 days. If you need to screen capture or take a photo, it's fine. Or you can check with your OrangeTee agent to invite you for these events. So 1 week later from today, the 13th of January, we have a market outlook session. This will be a live session. You can see the image at the top there. It's a AAA event where we help you to avoid overpaying. We help you to pick the right properties. We talk about tax optimization. We talk about projected investment returns and help you to act with confidence. It's a physical event at the Collective at One Sophia. Then the weekend after, from 17 to 27 Jan, we have the Newport Residences preview window. I encourage all of you to take a look at the preview, take a look at the project. And we also have a special in-person consumer seminar on 20th Jan, right, by a very experienced OrangeTee agent, Mr. Chipson Ma. He's our chief trainer. So he's there. He will share many, many excellent insights on Newport Residences and the market in general. Then on 29th of January, if you want to take a look and have a better idea of River Morden before you decide to go for Newport, right? We have a River Morden sneak preview on the 29th of January, right? This will be a big review because on the 20th of January, internally as agents, we will have an architect brief where we will get the latest information of River Morden. We will sort it out and then we will be able to share with you during the 29th of Jan River Morden sneak preview. So as buyers, you can make a good comparison at that point of time between Newport and River Morden. Looking ahead further in 20th of February, which is, I believe, it's 初四, right after Chinese New Year, we will have our River Morden official sales gallery opening. That's when it opens to the public. All right. So I'm very excited, and on the 29th, I'll be there to share about the River Morden sneak preview as well. And for me, I have history with the Singapore River, which started from my first IC role as Canning Hill Pierce. So if you're here listening and you want to learn more, I look forward to seeing you on 29th of January, and of course at each of the events listed here as well. Thank you very much. I've reached the end of my webinar sharing today. Elizabeth, back to you.
Hi. Thank you, Jim. I think this is going to be a very exciting month with all these activities lined up. So if you want to see Jim in person, you can register with us for the 13th of January, which will be held at the Collective. Jim will be there. And also, if you have any questions, you can put in the chat right now. We do have a few questions. So maybe I can start with the first question, Jim. Janet asks, is it better to wait or does entering now provide a strategic advantage?
Thank you, Janet. Is it better to wait? I
Wait
think as a
before buying.
buyer, usually when I advise my clients as well, if you want to wait, you need to know what you are waiting for, right? Are you waiting because you think the market will drop, or are you waiting because you prefer another plot, right? So to really answer your question, I think I need to know what are you waiting for, because I think right now, if you are looking for something in the core central region, for example, which I've shared, we have seen that the land prices for core central region is something that will not happen again. For example, your Great Wall, your District 9, your prime plot at River Morden, 1420 PSF per plot ratio, that's already history. We are already seeing your outskirts close to close to $1,400 per square feet per plot ratio. Bukit Timah has already exceeded $1,820 per square feet per plot ratio. So if core central region is something you're going for, then I think it's something that you don't have to wait. It's the right time to act. Hence my sharing today. Yeah. Whereas if you're looking for something that's more mass market, you just want somewhere to stay in a particular location and the launch is not coming yet, then I guess waiting might be a better choice for you. I hope that answers.
Yeah, so it's a good time now because we have two central launches that will be launching soon, which is the Newport and the River Modern. So there was another question by Mr. Roy Chua. There are talks on potential abolishment of ABSD recently. Do you think it will happen in the next 1 to 2 years? Do you have any insights or views on this? The abolishment of ABSD?
My view on this, and in fact, I was speaking to a friend over lunch today, right? He's also in his mid-30s, around the same age as me. Um, he actually told me, I mean, very openly that he doesn't feel that the prices today are very expensive, right? Although we might read the news, we might hear that we might hear that PSF prices have increased, right? If you really look at the quantum prices, especially with the new layouts, post-harmonized layouts, where your three-bedroom units, practical living with 9 square meters bedrooms, their sizes are about 800 square feet, right? Even if your per square feet is like 3,000, you are still within a low 2 million, 2.5 million range, which is actually quite a comfortable budget for many professionals, right, who are working
Mm,
today, dual income and upgrading from their
mm,
BTOs. It's a very comfortable budget for many of these home buyers. Hence, we see the response of property sales doing so well. So, barring any major crisis, I really do not see the ABSD getting loosened within the next 1 to 2 years.
mm. I think that was a great reminder too that you mentioned harmonization, because the PSF increasing in the recent launches has a big the harmonization plays a big part. So you're right, like the 2 to 2.5 million is actually the sweet spot that buyers are looking at. And I think for a lot of our clients, we advise them to also not just focus on the PSF, but to look at the whole quantum price, right? Mm.
Yeah. Maybe let me just add a little bit more on that. So what I
Mm-hmm.
have also realized and what I have also found so attractive about the CCR and especially the central areas properties is that
Mm-hmm.
when you look at it, especially if you look at what's on the market right now, uh, if you have your OrangeTee agents, you can check with them. If you look at the availability of units post-launch, right, in the OCR market, you will see that the prices of three bedrooms, for example, are already close to 2.5 million, right? Unless you are so lucky you manage to enter very early at new launch, you have a good ballot number, right? In fact, the market prices, you can also enter into prime central area properties, right? It's the price gap is so close. And when you purchase something in the OCR regions, for example, I would say they are still safe purchases because the quantum is generally still lower, and Singapore market is very resilient and will grow in the long run. But if
Mm-hmm.
you realize that when you buy in OCR, your PSF is going to be one of the highest in the area, your quantum is also going to be one of the highest in the area. Whereas when you look at CCR, for example, let's just say River Modern, your quantum prices and your PSF prices, they are still very comparable. In fact, because of many larger and sometimes even freehold properties, the quantum prices that people are willing to pay, for example, for a two-bedroom in that region can go up to 3.2 million, whereas for three-bedroom is more than 5, 6 million. So
Mm-hmm.
your entry price is so comfortable comparative to your neighbors for the CCR versus the OCR location.
Mm. Right. Okay, thank you so much, Jim. Are there any more questions? If you have, please type into the group chat. If not, once again, Happy New Year, and we hope to see you on the 13th of January. Do contact the person who invited you today to the seminar and register for that. All right. If there are no more questions, have a good night and Happy New Year.
Thank you, everybody. Happy New Year. See you all soon.
Bye bye. The webinar.